Thank you all very much for joining today for our Qualified Accredited Investor program. I am really excited to have this conversation. I think this is a wonderful, wonderful thing and something that's very much needed in our industry and for folks at large, to be honest with you. And I think the Doriot team has put together something that's really pretty exciting and interesting on that front. So anyway, we're going to dive into all things Qualified Accredited Investor, what Doriot is about, what these guys are about, how they can help you, and where things are heading. So with that, first off, would love to just have Gerry and Dan just provide a little bit of background on themselves, who they are, and what Doriot is all about.
Sure. Well, thanks for having us, Chris. This is really exciting to be here. We've always loved our partnership with KingsCrowd. We love what you're doing. You've really sort of trailblazed the future of what we believe is the future in investing. So kudos to you and your team. And thanks again for having us.
Yeah, absolutely. I appreciate that.
Doriot, it's named after the founder of venture capital, George Doriot. And our mission has been very clear. We believe we represent the future of investing education. We believe the future is quite bright for individuals that are looking to allocate capital, particularly into the private markets. We're seeing massive changes happening with the venture industry where we see institutional venture getting squeezed because the cost of starting companies is going to be so much less in the future, opening the door for individuals to participate. And we've always identified three major barriers to this transformation. The first one is education. The second piece is lower minimums, access to great deals with lower minimums. And the third is access to those deals. So you solve these three problems, and we will have a burgeoning private capital market opportunity for individual investors. Our participation in this has been education, and we've released two products into the market. Our first product is Fantasy Startup, where we give you an investing simulation. We have 50 companies to invest in. They're real companies. And then you can actually backtest your own startup investing strategies. And then, of course, our second product is QAI, Qualified Accredited Investor, which is a program that we call basically a venture MBA in a box. If you can pass the written exam and score 70% or better on the written exam, and also achieve profitability on the startup investing simulation, then we believe you're in the top 20% of venture knowledge. And that really positions you to succeed going forward when you're looking at various investing opportunities to judge and gauge which opportunities are better than others.
I love that. And Dan, do you want to just give a little background on yourself as well?
Absolutely. So I'm actually a former student of Gerry's. He was my venture capital and entrepreneurship professor way back in the day at Indiana University. I'm kind of our director of product and co-founder, and led the design and development of Fantasy Startup and the QAI program as well. And really what intrigued me most about Doriot, I guess looking back now, 5-6 years ago, was really one, opening up education for the space. It was, at the time, I knew absolutely nothing about venture capital, and it was just absolutely fascinating. But two, the concept of whether you're a young person, whether you're further along in your career and wanting to really kind of open up just democratization in the space. That's what we're really trying to do here. And that's what spoke to me most about the project and what excites me the most moving forward.
Well, you mentioned something that I think is so interesting. You know, most VC firms try and hire really young staff because they know they're going to be most connected to like the future trends and what's exciting and developing in the world. And yet the youngest folks are the ones who just haven't accumulated any wealth yet, and thus they're not accredited and they can't invest. So most of the folks who, you go to raise capital from these days, frankly, from my own experience, the ones with the, the accreditation, are the old folks. They're really old folks, right? Who have accumulated a lot of wealth over a long period of time, and yet are not necessarily the most tied to the most innovative, exciting new things happening in the world. Because they're out of touch with what's occurring in the world. So anyway, it's just kind of a funny issue that I think arises from these old accreditation rules. So actually, if you don't mind, let's start there. Let's talk about traditionally, what is an accredited investor and why is it potentially possible now that we could create kind of a test that enables people to use knowledge rather than their wealth to show that they're accredited?
So the accredited investor rule, as defined by the SEC and their regulations, is someone who earns $200,000 or more per year, and or has $1 million of net worth net of their primary residence. This has been used since 1983 as a proxy for financial sophistication. That is, if you meet these standards, the SEC basically believes, or not, I don't know if the word belief is correct, but would say, yes, you are capable of investing in the private markets. We don't need to really protect you. And if we stay within sort of these guardrails, we can allow for less disclosure and less regulatory requirements for all the companies going out and offering stock for sale. And it's worked, I guess, fairly well. The problem is that it keeps 99% of the population out of the private capital markets. And what's happened in the last 20 years is that, unlike Microsoft or companies like Microsoft that went public at $350 million in valuation, a company like Microsoft today, back where they were in 1992, they would be going public at probably $250 billion in valuation. So all the alpha is being sort of sucked dry by the private capital markets, and then it's flipped over to the public capital markets, and you're looking at 5 or 10x returns, where the private capital, you get into the right deals, you're looking at 500 to 1,000x returns. And so this is a fundamental component to wealth building. And so there's been a large growing swath of people saying, hey, we need to change these rules and have a separate path other than just wealth. And so that separate path is an education a path. So an exam, which that's what QAI is. It is a FINRA quality exam, and it covers 14 categories. And the SEC is reviewing our application as we speak. Of course, this takes a long time. SEC deals with a lot of different issues, Bitcoin ETFs most recently. But this year they are talking about, they're doing a 4-year review of the accredited investor rule, and this is on this is on the agenda.
I love that. Now, you talk about having kind of 14 segments in there. Can you highlight a few of the ones that you think are really interesting that people would learn about if they were to take this course?
I think the things that are most interesting, and we've gotten validation from folks who have gone through the program, is just the approach to scoring companies from a pre-seed, seed to a Series A. Valuation. We have a sort of a different view of valuation. I mean, it's based on the terminal value approach, but we look at it more from a sensitivity analysis, looking at various outcomes, and sort of and testing what entrepreneurs are going out with their companies and valuation against what your own assumptions are. And then another one that's interesting is the equity stack, and just understanding that when you enter into a deal, that company's probably going to raise additional capital subsequent, and sort of where do you fit in that equity stack, and then how do you conduct a waterfall and project out, okay, if I invest here at this valuation and the company exits at this level, here's what my return would look like. So being able to sort of systematize that and understand that, I think, are really interesting.
So yeah, in some ways, I feel like a lot of this course, and what I appreciated about a lot, is you're learning how to do your due diligence and be a thoughtful investor, which if you're already investing in regulation, crowdfunding, regulation A+ offerings, one, you're probably proving yourself capable of being a thoughtful investor. And to think that you can't go on AngelList and Republic Labs and these other places and be able to invest in those deals because you're technically not smart enough or wealthy enough to do so is kind of silly. So I love that you can help guide them on that journey to qualify and say, yes, you can in fact do this. So in terms of the SEC, I know that they've looked at these rules before. It's been wealth-based historically. So did they put out some guidelines about, what a course would need to look like and how you could kind of verify that they're accredited from a knowledge base?
Unfortunately, they haven't. I don't think the SEC is fully equipped to sort of lay out these guidelines. There's a movement in Congress to say the SEC, you must have an exam, but just throw it into the lap of FINRA to figure it out. FINRA is sort of the quasi-regulatory body that oversees public licensing for anyone participating in the public markets. I'm not sure FINRA, what they have internally in terms of capability of doing this. So we felt like this should be a private market movement where we go out and we develop the greatest curriculum that you could imagine that allows people to truly succeed, not just pass an exam and get a license, right? Getting a license is one thing, but actually activating, your knowledge and turning that into wealth building skills is a different story. So we do believe that this is the most comprehensive exam that FINRA could write, the SEC could ever imagine. So we'll have to see where that goes.
And in terms of your course, how does it work? Is it are you meeting virtually with many other folks in the group? Or is it a cohort? Is this just kind of an online class you take on your own? What does it look like?
Yeah, so Chris, we have two paths right now. In launching back in the fall, we launched with only cohort number 1. So it's a 6 to 8 week program. Every week we have live jam sessions where we come on and break down 2 to 3 modules from the exam prep manual, kind of really going in detail. Gerry and I will lead those calls with it's kind of a core presentation on some of the really core aspects, but then a lot of it's just a real back and forth jam session between the founders on the call, VCs on the call. And so you're really getting not only our perspectives, but perspectives from everybody else in that cohort and all of their unique experiences that they bring to the program. And then in addition to those, in the cohort format, in addition to those live sessions, you've got, of course, the digital study resources. So the exam prep manual, the investing simulation, module quizzes to test you on really every element of the course. And then on the other path, which is the self-guided path, you have the same study resources, but you don't get the networking or those live jam sessions. You get kind of the recordings from cohort number 1. So there's really two paths that you can take, either the live cohort session, which cohort number 2 is launching in February 15th. And then the self-guided is more if you don't really want the kind of group learning session, but you still want to go on your own path.
Got it. And then going back to kind of the fantasy side, because I really thought this is very, very interesting. You said there's 50 companies in there that are real companies. So how does it work? Does it basically try and simulate, it takes a decade to get returns on startups, right? So
Right.
have you created a simulation of companies from the past? Have you renamed them to make it so you don't actually know if they're going to be good or not? And then you have to kind of make your investment?
Exactly. So we pulled basically 50 companies from PitchBook. Like you said, scrub the names. They're not the obvious ones. So it's not Uber, it's not Airbnb. You would never know which one you're looking at. So it's and they're all relevant today. So it's all new. And then, yeah, you're looking at kind of a 1-minute analyst pitch of what the company is, what they do, and then the core kind of areas that we teach on. So who's the team? What's the market? What are the risks, the valuation, et cetera. And it's all based on real financial data pulled from PitchBook. So yeah, and then as you go along, you'll make investments, either invest or pass, get the ability to reinvest as the company goes along. Again, all kind of according to what actually happened in that company's life cycle as it went along in real life. To your point, Chris, just on a time frame of days rather than years, right? So you're getting that instant feedback right away with no actual risk from your own capital actually on the line.
That's really cool. By the way, I think that's something, no matter what you're doing, is a worthwhile exercise to go through. If you're starting to do startup investments on any of these platforms, I think it's worth going through the program just to try that out and see, to realize, I think it's a good learning for everyone to realize, like, we all make mistakes. And when it comes to startup investing, there is a lot of failure and you're not going to be 10 for 10. And I think when you have that mindset, it helps you be less emotional about the whole thing and realize, like, you really got to try and stick to facts and be thoughtful about the investments you're making and also not throwing all your eggs in one basket, right? There's a lot that can be gleaned from seeing failure on a screen and going, oh, okay, not all of these things are going to work out.
Yeah, that's
Gerry,
one of the best, or one of my favorite insights or pieces of feedback we've gotten from the thousands of people who've gone through the startup investing simulation specifically, is that they invested the company that they thought was going to work out. They were positive it was going to work out. And then they were devastated when 5 days later, 5 years later in the context of the simulation, it all went to zero and they lost it all, right? And they're heartbroken, they're devastated at all of that, but they're thrilled that they were able to do that in a simulated environment and not actually lose the money in real life 5 years from now, right? You can do it in an accelerated time frame. But Gerry, I'm not sure if you have any other kind of favorite takeaways or learnings.
I think the most important things about the simulation, Chris, to your point, is that we have a lot of personal biases in our decision making on a daily basis. And one of the greatest attributes of being a great investor is to remove your personal biases and try to look at an opportunity objectively to determine whether it's a credible opportunity or not a credible opportunity, emotions aside. And I think having 50 at-bats looking at this and getting to a point where you're almost robotic, like going through, the various, the markets, the team, the valuations, the risks, the signals, and going through that cadence helps you take away sort of the emotional side of this and just, does this make sense or not make sense? So that's the important thing. The other the piece of this, and I'm going to embarrass myself quite a bit here. There's two investments that, one I didn't make and one I did make that I wish I have regrets on, right? My very first $25,000 I ever had in my bank account, I gave it to a startup and lost it in the first year, right? It was devastating. I recovered. And then I said no to an opportunity where I passed on an opportunity. I didn't say no. I just didn't take advantage of the opportunity. But I was going to be in the first investing group of Calendly. And Calendly is valued at $2.5 billion. And I was offered the opportunity to be in the first cohort of investing, right? This is going back 2014 to 2015. Strategy would have solved both of those problems. If I had the right strategy, the right understanding, would have solved both of those problems, right? I could have lost here, I could have made there, but if I had a strategy of like, okay, if this deal passes a certain level of criteria, I'm in. Even if I can only do $1,000 versus try to do like $25,000 in one deal, right? So fantasy startup essentially trains you to think in the context of, okay, if this is a credible deal, I'm in just for a small amount and let's see how it plays.
Now, something that I really like about you, Gerry, is kind of your background. And I'd love for you to tell people a little bit more about kind of your traditional day job. And I'd love to hear a little bit more about kind of what drove you to truly want to create this solution for folks.
Sure. So I started my entrepreneurial career back in 1998, Internet 1.0. That was a whole education in of itself, but I've since started 5 companies, sold 3. In 2004, I started teaching venture capital at the Indiana University Kelley School of Business, which back then it was still very, very small in terms of interest in venture. It's since ballooned to where it is today. I think I started teaching 2 classes. Now we have 7 or 8 classes per semester talking about venture and entrepreneurial finance. And over that time, I've invested in a lot of companies. And of course, I had experience on both sides of the table, understanding how to raise equity capital and then investing equity capital. So I have a unique perspective. And I've been a huge researcher into this space. So I've tried to learn everything about this space. And then when regulatory crowdfunding, regulation crowdfunding started sort of cropping up in 2007 and 2018, and Chris, I know you're a pioneer in this, right? You're probably just speaking to an empty room when you started KingsCrowd.
So many empty rooms.
I have a total respect for that, but we got to think about our startups or our companies 10 years in advance, not 2017. But we started seeing, okay, the decentralization and the democratization of venture is it's starting. Okay. Reg CF is not perfect, but it is a start, and it's a very quality start. We see that there's going to be future iterations of this. And there's going to be way more momentum, in the future with individuals having access to really high quality deals with low minimums. And so I just made, I just said, if I'm going to devote the rest of my life to something, it's this, because I love this space. I've seen the ups and the downs. I believe ownership is the most important thing young people can do, is to put themselves in the mindset of being an owner, not a renter, and not looking for the quick hits, but looking for, okay, I'm going to plant a seed, I'm going to let this grow, I'm going to leave it, and I'm going to plant lots of seeds, and they're going to wake up one day and they're going to be so grateful that they did this for themselves and their families.
In terms of, and thank you for that, those are terrific answers. In terms of taking this course, does someone have to come in with any sort of certain background? Is there going to be a lot of math? Is there anything that people need to know before they are to sign up for something like this?
Yeah, absolutely. Sorry, Chris, I was responding to a question in the chat there. I may as well say it for everyone here.
Please.
Our programs are not limited. The question was, can Canadians or non-Americans participate in the programming? As a Canadian, I can confirm that yes, absolutely. We've had students and members from all around the world, be it Canada, the UK, Oman, India, kind of all over the place. So absolutely, and as many perspectives as we can get are definitely all welcome. So, and then to your question, Chris, kind of what's if I understand correctly, what kind of background do you need, comfort, what your comfort level with math and all that is?
That's correct. Yep.
Yeah. So really, I am, again, as a Canadian and somebody who's not good at math at all, we really walk you through everything. So there's I'd say a very basic level of math involved, but we really break everything down in the exam manual. So it's nothing more than multiplication, division, all of that, and broke it down really simply into formulas that can be replicated either by hand or in templates that we'll provide in the course and in the cohorts and self-guided programs for doing that all in Excel or Google Sheets or however. So absolutely, you don't need to be a rocket scientist or anything like that to really get comfortable with the kind of the core calculations, and then just give you some really helpful frameworks in which to apply those.
Awesome. And one of the things I want to be really clear with people to understand is so first off, while there's not certification yet by the SEC, you're in process. So hopefully the goal here is you take this course and the SEC truly looks at you as accredited. And when you're asked on these platforms, are you accredited? You'll be able to submit and say, yes, I am a qualified accredited investor, which would be really cool. Now, the value of that, right, is only as valuable as now you have access to really cool Reg D deals. And from where I sit in the world, I just want you to know, like, if you become a qualified accredited investor and it's all approved, what I think is so cool is like, if you go on AngelList, you can invest in funds. Like there's really cool syndicates and VC funds with low minimums, right? $1,000, $5,000 that you could get into. You could go on sites like Our Crowd. You could go on sites like Republic and use a Republic Labs and go on the back end and be able to invest in some of the really cool deals. So it is going to open up your world, and it's not that it just opens up your world and then there's nothing there for you to invest in because the minimums are still 25, 100K. You actually get to invest in deals with $1,000, $5,000 that are really, really interesting. So just know that if the goal here is to be able to provide you access to some really cool stuff that's out there today and does exist. I want to take a few questions from the crowd, and please continue to enter them into the Q&A section. So one thing that Stan wrote in is, have you looked at partnerships with the CAIA or CFA Society to fast track recognition of the QAI certification?
We haven't, but we certainly think that like working with the CFA would be a very important milestone, just simply because there's 350,000 financial planners that they should know and understand venture. They have clients that are thinking about dipping their toes into it. And so we see this as a very symbiotic partnership, but we haven't started those conversations yet. But also just not only financial advisors, but attorneys who are looking to be into venture. I mean, the one thing that I'm an attorney and I got a law degree specifically for the reason I just wanted to understand what the attorneys understood. And this kind of program helps attorneys think strategically, put themselves in the heads of founders when you're thinking about crafting deals. And so there's a lot of different groups that I think would benefit from this who are sort of tangentially, sort of connected to the venture world.
I love that. Another question that came in, and this is an interesting one. I'm not sure there's any amazing answer here, but they said the challenging part of seed investing is if and when the liquidity event occurs. My experience is that when a private company goes public, it seems to be a race of transferring your shares to a brokerage account before the stock value tanks within the first couple of weeks on the open market. Any thoughts or personal experience that you can offer?
No. I'd have to look at the specifics on that particular deal. But I do agree that it feels like there's a lot of friction and there's a lot of, small little nuanced things that should be fixed. And I do believe that we're on the verge of tokenization and blockchain, and I do see a lot of these things being fixed over time, but there's still a lot of friction today.
And one piece that I'll add to it from my own experience with this is there's a couple of items here. One, actually at KingsCrowd, we're working to be able to help identify when companies are planning to IPO, so you could get out ahead of it and start asking your questions and try and get your stuff transferred early. But the second thing is that's not supposed to be how it works, right? These things aren't supposed to price, go public, and then tank. That is a result of so many factors, including all of the bloated private market valuation, so on and so forth. But one of the other key items is that we've seen some of these very quick IPOs over the last few years of CF&A plus companies that we shouldn't be proud of as an industry that went public far too early. Companies, unfortunately, really should not be going public before they're, sub 500 million, $700 million today. And the reason is because when you're super, super small, what we're finding is that when these companies IPO and they have very small market caps, there's these short sellers out there that kind of know that no one's really paying attention to these small companies and no one knows very much about these small companies. And they're basically plunging the stocks downwards and profiting from that while really hurting all of these early investors. And again, in addition to the fact that they were probably over bloated valuations and all of that to begin with. In a perfect world, you're seeing these companies IPO with real investment banks involved in 5 to 8 years, very well-established revenues, lots of investors coming in on the IPO, and the price does not just drop after a couple of weeks. That has been an experience that many people have had recently. That should not be the long-term experience if we do things right and companies do the things right over the next decade.
The one thing that I will offer on this, and I've talked to a lot of VCs who all have done, maybe not all of them have gone through this, but if you're invested in a company that's fortunate enough to go public, you want your shares registered to sell in the offering, and you're out of the deal. Don't play the stock market beyond your investment. I think most people who want to stay on that deal for an extended period of time trying to get higher alpha usually get burnt. So you want your offering, and you want to be a part of the original offering where the money's coming in and you're out before. And if you want to buy the stock, buy it on the public markets. Don't hold your stock in restricted stock, playing the market. That's the best advice I think I could give on this.
I like it. Another question that came through, if you're already an accredited investor, what would you say the benefit of taking the course is?
It's the lift in your knowledge and your understanding. I mean, I think the more that we know about this game, the better we are. The more confident we are, the better decisions that we make. I think learning is a lifelong journey. And I can guarantee anyone who would take this course, they're going to learn something. And you just never know what that translates into. But from what our studies have shown, we're getting lift anywhere from 50 to 60% for folks who are just basically getting into this. But those who saw themselves as a 4 out of 5 now see themselves as a 5 out of 5 having taken the course. So you're going to get a lot of lift in your understanding of venture.
Yeah, we actually had our entire analyst team take it, and this is their day job. This is all they do. And every one of them walked away feeling like they took at least a few things away from it that were really valuable for their knowledge.
Yeah. I think one of the things that sticks out to me from the feedback we got from cohort number 1 was just the ability to better articulate your own thesis, right? If you've looked at any number of deals, whether it's 3 deals or hundreds of deals, you probably have some kind of inherent gut feel that you would look at each new deal with, but you might not be able to really articulate it or exactly what you're looking for. That's one of the things we heard from cohort number 1 is just having really helpful frameworks in which to take what you've already learned from your own experience and from other people's experience in your cohort and be able to apply that, speak about it, articulate it, and be, I guess, cognizant of that moving forward. And that being one of the biggest takeaways for me from cohort number 1.
Something that's come across a couple of folks have now asked about is what is the cost of the course? And if we could drop the course link in here as well, that would be great. And I know we'll be sending it after, but I'm happy to drop it in here as well.
Yeah, so I'll drop it in the chat after this, but the cohort price, the full cohort price is $699, but for KingsCrowd members, we're offering a discounted $100 discount off that, so a $599 price. And then if you choose to not do the cohort version, but the self-guided version, that price, the full price is $299, and we're offering a $50 discount for that, so bringing that down to $249.
Awesome. And yeah, we will get those links. You'll drop them in the chat, and then you could also, we'll send it an email after, so we make sure you have an opportunity to sign up. And the next course is starting. If you're joining the cohort, it's February 15th. So if people are interested, they should sign up sooner than later, I imagine. Terrific.
Absolutely. Yeah.
Another question I came across, I'm looking for investors for a 506c offering. How do I find qualified accredited investors, and how do I verify their accredited status as a QAI? Where does this exist on the SEC's website?
So if and when, and I'd say when the SEC approves us, then then any investor would just simply submit their link to their certificate. So it's on the blockchain and it's there in perpetuity, unless there's some sort of annual, like continuing education requirement that the SEC requires, and then we would have continuing education. Right now, we don't have that because the SEC hasn't approved this program. So right now, you're essentially in the position of having someone's accountant or financial advisor verify that the person that you're speaking to is in fact accredited. And this is the onus you have as a founder, is to verify each of your investors as accredited if you're going to take advantage of one of the exemptions in Reg D, which is interesting because it's a self-regulatory process. It's subject to a lot of sort of weirdness going on in terms of, who's verifying you're accredited and so on and so forth. So an education path, or just clearly, as this person passed the exam, they're eligible, and make it clean and simple, but we're not there yet.
And do you have a sense, like the SEC, in terms of approval process, like when you think these things will come about?
I think this is the year. I mean,
Yeah, within the year.
If they do a review every 4 years, I cannot imagine. There is immense pressure from the Small Business Advisory Council. There's immense pressure bipartisan pressure from Congress. We just have to modernize our approach to allowing access to the private capital markets, because this is where all the action's happening.
No, I will tell you, we've been reading, or personally, I've been reading a ton of coverage on the accredited investor rules changing, using these QA certification courses. We're seeing more and more of it, and it's pretty prominent. The large publications are talking about it. So I kind of get that feeling within the year, we're going to see this actually happen, which I'm very excited about, and I think is much needed and long overdue. One other question we have here is, how many people who complete the QAI certification pursue a Series 65?
We don't have enough of a operating history to sort of determine that. I think that for those who absolutely want to be a accredited investor by SEC rules today, go ahead and pursue that. I don't think the exam actually is reflective of the knowledge that you need to have to be successful in the private markets, but certainly that's probably the fastest approach today.
Awesome. Makes a ton of sense. And just one thing for everyone who's on this session to know, when this becomes the standard and you become accredited by taking this course, our plan is to offer the KingsCrowd Capital Fund, which is a $20K minimum, and make it $1,000 minimum so more people can partake and invest in the fund, which I'm really excited about. So we're waiting on this just as anxiously as the rest of you. One more question that came through: how often do you run the course? Annually, and what is the time commitment?
Yeah, so right now, again, cohort number 2 is launching mid-February, February 15th. We're open to adjusting as needed, but I think we're going to run this quarterly. For right now, it's currently our plan. And how much time is needed? I mean, as with, I think, any course, it probably depends how much time you're willing to put into it. At the very minimum, it's, there's 1 to 2 hour live session call per week if you're in the cohort. And so at the bare minimum, if you want to do that and follow along with the study materials for each week, is probably 2 to 3 hours a week. But you can absolutely go above and beyond. And we're, for cohort number 2, planning on doing tons of different events to get to know everybody in the cohort, whether that's live happy hours, coffee chats, one-on-one matching up with members on, in your geographic region or in your area of interest. So you can really either take it as far as you want, or just kind of stay at the minimum couple hours, 2 to 3 hours a week.
And how many people are typically in each cohort?
So right now we've got a cap of 50 members per cohort.
Very cool. Last question here. Can you all explain what a Series 65 is, please?
It's a license that you can obtain from FINRA, which basically it's kind of like a stockbroker's license, which allows you to offer or sell securities. I'm not sure if that has to be tied to actually a financial advisor. You actually have to have a job in the market to get that, or that if that's the 82. But you're essentially getting licensed to sell public securities.
Well, I think that's all the time we have here. Thank you everyone for joining today. If you click on the chat in here, you will see that the discount link is there for you to be able to sign up for the cohort that's getting started on February 15th. I hope a lot of you join. I think it's a really, really wonderful program. Like I said, almost all of our team actually has taken the QAI course at this point, and has found it very valuable despite working in the industry. So there's something for everyone absolutely to learn from it. And I think it's going to provide some really cool access to be able to invest in deal flow you otherwise wouldn't be able to invest in the future. So thank you again for the time. If you have any questions, please reach out to us and we'll be sure to get as many answers as we can from Gerry and Dan in the days to come. And appreciate you all, as always, for joining. Have a wonderful day.